Good day, I'm Idehen, and this class is brought to you by Isaac Humanitarian Foundation. I want to take you through financial accounting under the topic manufacturing accounts. Yes, we have done something related to this, which is our trading accounts. Yeah. So, what is it about manufacturing? What are we manufacturing? If you're familiar with the trading account, then this account will be an easy task, because manufacturing accounts also comprise the trading profit and loss account. So, manufacturing account is just talking about how are we, talking about production. What are we producing? What are we manufacturing? What is the cost of our manufacture or cost of our total production? So the manufacturing account is only concerned about what? Determining the cost of production of what our goods. So before that, let me take you back a little. If a business is to produce anything that they want to sell, because the purpose of production is to what? Is to create utility. Creating utility is what? To make people, to make goods available for people who wants to use it. That's creation of utility. So that's why we are producing, or that's why we are manufacturing. So now before that, you have to make a decision, which we call what? The make or buy decision. Make or buy decision, what does it mean? Make decision means that what? Manufacturing. If we make, we are manufacturing. But if we buy, then we are just doing what? Buying and selling. That is what? Trading. So when we buy, we are only meant to prepare our what? Trading profit and loss accounts, or in summary, our financial statement or final account. But when we decide to make, then we are going to prepare our what? Manufacturing account, coupled with what? Our trading profit and loss account. So that's the difference between manufacturing account and what? Trading account. Trading account is when you buy to sell. Manufacturing account is when you make and what? Sell. So trading account is also included in what? Manufacturing account, because we don't just manufacture and leave it. We manufacture and what? Later sell. So how do you make that decision of what? How to make, or to the decision to make or to buy? How do you do that? To make or to buy? The fact is that we have to consider the what? The total cost of production. Cost of production. Cost of production. We have to compare it to our what? Our purchases. Our purchases. Compare our cost of production to our purchases. But not only to our purchases, to the what? To the cost of what? Goods sold. But while comparing your cost of production to your purchases, cost of production, this one is for work, make. Purchases, this one is what? Buy. So you have to make decision. Do you want to make or do you want to buy? So in any business, because the sole aim of a business is to what? Make profit, but not just make profit, to what? Maximize profit, to make the highest profit possible. So in that situation, how do you what? Increase your profit. To increase your profit, there's only two ways. Is either you what? You reduce your cost, or you what? Increase your revenue. So this one has to do with our cost. So in that essence, we have to make sure that the choice we are making here is the one with the lowest cost. So meaning that if you have considered our cost of production, we have what? Prepared our budget, and we have forecasted that our cost of production will be higher than our purchases, then it is better we what? Buy. But when we have forecasted that purchasing it and the cost to bring it to what? To bring it to the warehouse, that is our carriage inward. The purchases plus our carriage inward. If we add those two and we find out that it is higher than what the cost to produce, then we will choose what to make. So meaning that if our purchases plus carriage inward is higher than the cost of production, we choose to what? To make it, because that is what cost what? Effective than what? Buying outside. But if our cost of production is higher than our purchases plus carriage inward, then we choose to what? To buy. So that is the reason why we call it to what? Manufacturing account. You don't just start manufacturing without what? Considering whether it will be better for you to purchase it and be selling that thing that you want to manufacture. You don't just what? Just start manufacturing. You have to what? You have to what? You have to make your what? Your budget. Make your what? Decision whether to what? Make or to buy those what? Goods. So in manufacturing account, what we are interested in is just to what? Derive or to determine our cost of production. And cost of production is the total cost of what? Manufacture, or total cost of production, the same way. So cost of production comprises what? The factory cost and what? The overhead cost. The factory cost is the same thing as overhead cost. So if we are talking about what? The direct cost and the indirect cost. Direct cost, or you call it what? Prime cost. So the direct cost plus the what? Overhead cost will give us what? Our total cost of production, or simply cost of production. And in some other times, the company may decide to add a certain percentage to our cost of production for them before they are transferred to the selling and distribution center of the organization. Because in an organization that is that is manufacturing, they will have a separate unit for what? For selling, and a separate unit for what? Manufacturing. So those who manufacture will transfer the goods to what? Those who sell. So they may decide to what? Add a certain percentage to that so that they can make profit on what? Manufacture. So it depends on what it is or what the company decides. So we are going to briefly look at what? Manufacturing account and manufacturing account in detail, because I'm sure we already know about our what? Trading profit and loss account. So we majorly focus on the manufacturing aspect of manufacturing account. Alright, we have a question on the board and we are going to treat it sharply. So, it said Baswan Industries. Then it said manufacturers of what? Filling cabinets. The following information relates to the operation of the company for the period January 1st, 1997 to December 31st, 1997. So these are all the transactions of the company for the period year ending 1997. So but before this, let me bring you back to a prime cost. Prime cost, I said prime cost is what? The total of what? Direct cost. And the total of direct costs comprises what? The direct materials, direct wages, and what? Direct expenses. Direct materials are all the materials required to what? Produce the what? The goods. Direct materials. Direct wages are what? All the workers involved in the production of the goods. Different from what? All the office workers. Workers that are what? Manufacturing the goods, that are involved in the production. While direct expenses are all the other expenditure aside from what? The direct what? Material. All of that expenditure expended on the goods, expended what? Other expenditures used in what? Producing the goods. Expenditures necessary to produce the goods aside what? The what? Direct material. That's what? Direct expenses. So now we come back to this question, and I'm going to take it because it says we ask us to prepare manufacturing trading profit and loss account for the year ending 31st of December 1997. So we do that quickly. Baswan Industries Limited. You have manufacturing trading profit and loss accounts. Manufacturing trading profit manufacturing trading profit and loss account. For the year ended 31st December 1990. So 1st December 1997. So quickly, we are going to scale through. So when we are manufacturing, the first thing we need is our opening stock of raw materials. So we get that from here, from the list. So we have stock of raw materials as at the beginning, 425,000. 425,000 opening stock of raw material. Opening stock of raw materials. 425,000. Followed by our purchases of raw material, 600,000 purchases of raw material. This is equivalent to our normal trading account, but now we are dealing with raw materials in what manufacturing account. So we have purchases of what raw material, 600,000. Purchases of raw material. Of raw material, 600,000. Let me include it here. 600,000. Wages of factory workers. So factory worker is a direct wages. So it's going to be included in our cost of goods or cost of production. So it will be a direct cost. But before that, we have a carriage on raw materials. So we have to add carriage inward of raw materials. Carriage on raw materials. Carriage on raw materials. How much? 20,000. 20,000. So I'm adding this. This then gives me what? 620,000. 620,000. So when I add this, I have 1,045,000. That will be our cost of raw materials available. Cost of raw materials available. So we have a cost of raw material available. Cost of raw materials available. Cost of raw materials available. Then we come again. What we have? Carriage of raw material, factory supervisors, salaries, selling and distribution expenses, sales, discount received electricity carried on sales, damaged raw materials return. So we still have damaged raw materials return. What do we have to do? We have to remove it. So the materials that we have brought in that were available, part of them are returned. What are those materials? How much? Damaged raw materials return of what? 80,000 naira. Damaged raw material return. Here we have damaged raw material return. Return. How much? 80,000. 80,000. So we are removing this. So here then we have 540,000. 540,000. So the total here now total will have what? Cost of raw materials available. Cost of raw materials available. When by the time we add the total, we then get what? 965,000. Cost of raw materials available. Then next, we deduct our what? Closing stock of raw material. You have a closing stock of raw material of what? 450,000. Let's closing stock of raw material. Closing stock of raw materials. How much? 450,000. Remove it. So it becomes 1,5. So 515. So this one will not be what? Cost of raw materials consumed. 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 So now we can now add our what? This is our direct materials that we have used in production. So we can now add our direct wages and our direct what? Expenses. So we now call, we have wages of factory workers. We call add wages. Wages of factory workers. Wages of factory workers, how much? 200,000. Carried on raw materials, we have done that. Factory supervisor salary, this one is not directly traced to what? To production. So this one is an overhead cost. Selling and distribution expenses, sales, discount received, electricity, carried on sales, damage, we have done that. Work in progress, office wages, discount, stock, or finished goods. So now we are adding up this. There is no factory expenses. We check, are there factory expenses? Electricity, OE, office. No, we don't have factory expenses. So we're going to add up this. Where this will then give us 715,000. So this one now will give us our what? Our prime cost. Gives us our prime cost. So from our prime cost, we can now add our factory overhead cost to get our what? Total cost of production. Add factory overhead. Add factory overhead cost. Factory overhead cost. Which are, then you list there, insurance of office is not due to the factory, printing expenses, rate on office, purchase of raw material, we've done that, wages, carriage of raw materials, we've used that, factory supervisor salary is 150, factory supervisor salaries. 150,000. 150,000. What else? Electricity expenses on factory. Factory electricity. Electricity. How much? 200,000. Office wages and salaries. Good. This can allow stock of finished goods as we transfer that electricity owing of 20,000. If we check, do you have office electricity here? office electricity. We don't have office electricity. So this electricity owing has to do with what? The factory expenses. So what we have to do now, since it is owing, and our concept says that what? All expenses accrued in a year must be what? Recorded, whether cash has been what? Received or not. So that is why we are going to add this 20,000 to this amount here, making it 220,000. 200,000 plus 20,000. So the total then be 220,000. Now we can add up. This then gives us what? 370,000. 370,000. I'm putting it here. 370,000. So the total of this then gives me 5, 8, 10. 1,085,000. This now is my what? Manufacturing cost. This is my manufacturing cost. Manufacturing cost. Now I have to adjust my work in progress. I'll adjust the work in progress into it to now get our what? Total cost of production, or simply cost of production. So now I have opening work in progress and what is our work in progress. You have the opening work in progress 300,000. Work in progress. Opening work in progress. We add opening work in progress. Add opening work in progress. How much? 300,000. Less closing work in progress. Closing work in progress. How much? 250,000. So we are removing this. Then this one remains the balance of what? 50,000. So by adding this total, we then have what? 1,135,000. So this then is our what? Cost of production. Cost of production. So from the question, they said we should what? Charge 20% on what? As what? As a benefit. Goods have to be transferred at cost plus what? 20%. Meaning that the 20% is what? Manufacturing profit that will be charged to the what? To the selling unit from what? The manufacturing unit. So what we have to do, we take 20% of this manufacturing profit. Profit will be what? 20% of 1,135,000. So the 20% of this is what? 0.2 times 1,135,000. We have 227,000. So this, we now call it our market value. Market value. By adding these two together, we get our market value plus 1,135,000. We have 1,362,000. So this is the end of our manufacturing account, when the cost of production is charged to the selling unit at a cost plus a percentage. So the manufacturing value is what we now compare. We now replace in place of what our purchases in the trading profit and loss account. So instead of having purchases, we have what? Our manufacturing value in its place. So using the opening stock, add what? The manufacturing value in place of the purchases. Then what? If there is any carriage, we add. Then we go on about our trading profit and loss account. So that is all about what? Manufacturing account. Thank you.